in our last session, what we saw was posting our journal entries into our main ledger. And really what we've done there is recorded the full double entry into our ledger accounts. Now at the minute, if you look at your ledger accounts from this example called George, you will see that actually these ledger accounts don't tell you an awful lot. Essentially, it's just a list of numbers on either the debit or the credit side, or both of some of these accounts. So what we need to do at each period end, which is usually the month end, but in this case it will be the 2 weeks ended, what we need to do is now close off the ledger accounts and balance those ledger accounts to give us more information to help us prepare those financial statements. Remember, our ultimate goal is to prepare the financial statements, the statement of financial position, and the statement of comprehensive income. So, looking at the main ledger now that we've just completed for George, now what we need to do is balance the accounts. And for this, you're going to need a ruler, okay, because we like things to be nice, neat, and presentable. Okay, so what we need to do is get a ruler. Now, you can see then, let's start with the cash at bank account. We can see that there's transactions on both the debit and the credit side. Now, the whole concept of balancing the accounts is the clues in the name. They should be equal. Both the debit and the credit side of every single ledger account must be equal, the same. Which means in a lot of cases you're going to have to force it to be the same to do a closing balance or a balance carried forward into the next accounting period. So, what we're going to do first, have a look at the cash at bank account. And we can see that the debit side looks quite a lot higher than the credit side. If you're not entirely sure, just at first glance, what you can do is you can make a little note. So you can say, what is the total of the debit side? What is the total of the credit side? And what is the difference? What would be the balancing figure? Well, for cash at bank then, the debit side, we can see that it was 50,000 plus 6,000. So $56,000 is the total of the debit side of the cash at bank account. If we then compare that to the total of the credit side, well, you need to get your calculators ready, or you can do it in your head, whatever. We can see that 5,000 plus 450 plus 7,000, well, of course, that's going to give us 12,450. So, adding those three totals down, that would be the credit side total. There's quite a big difference between the two. Now, if we take the difference, that's going to be our balance. Okay, the balance of these accounts. So just run that through your calculator, then what we should get is 43,550 as the difference between the debit and the credit side of the cash at bank account. And essentially that's the balancing figure we need to force both the debit and the credit side to be equal. Now you're always going to insert that balance on the lower side. Now clearly that would be the credit side in this case. So let's insert that balancing figure to force our cash at bank ledger account to indeed balance. So what we need to do then is this is going to be on the last day of the period, the accounting period. Now remember, for George we're doing this for 2 weeks, so this would be on the last day of the 2 weeks, which would be the 14th of April. So on the credit side then, 14th of April 2009, we're going to insert our balancing figure, but we need to give it a name. Well, this is essentially our closing balance, what I refer to as a balance carried forward. Okay, so the narrative will be balance carried forward, or C/F. Sometimes you see it referred to as balance carried down. That's fine, means the same thing. So balance C/F is balance carried forward, and we're going to insert that balancing figure of 43,550 onto that lower side, being the credit side. Now, because you've inserted that balancing figure, both the total of the debit and the credit side would be equal. So at this point then, with your rulers, you need to rule off a total. So we're going to total the debit and the credit side, and they're both going to total $56,000. And that's our account balanced and essentially closed at the end of those 2 weeks. Now, because the balance is closed, doesn't mean that the bank account just vanishes and goes nowhere. In the next day, the 15th of April, George is still going to have some cash at the bank. You can clearly see that he invested $50,000 and he generated $6,000 cash from sales, but only spent $12,450 of it. There's still money left in George's bank account, and we need to recognise that fact at the start of the next accounting period. In this case, the 15th of April, the start of the next accounting period. Now, what we're going to have then is an opening balance, which, as you can recognise, would be the opposite to the closing balance. Now, with an opening balance, we're going to call this balance brought forward. Okay? And the balance brought forward, or opening balance, will be on the opposite side to where the closing balance was popped in. So, in our cash at bank account, underneath the totals, 15th of April 09, balance B/F, or brought forward, well, that's going to be the same amount as the balance carried forward. So that 43,550, in it goes. Underneath the totals that we just drew. Now, generally, cash at bank account will be the largest account. So you can see there that obviously that account is quite full at the end of the period. What we're saying is, though, that George has an opening asset at the bank at the start of the next accounting period. He has $43,550 left, and he can spend that however he wants in the next accounting period because he has that balance there. Notice that the opening balance is on the debit side. That would tell you that that is an opening asset. So any opening balances, if it's an opening balance on an asset account, that idea of dead click will always apply. An asset is under the D of dead click, which represents debit. So a debit opening balance on an asset account, well, that means it's an opening asset. He has cash at bank. But what would happen if his opening balance was on the credit side? Have a think about that. What if his opening balance was on the credit side? Well, surely that would mean that he spent more out of his bank account than what he physically had coming in as cash, which would mean that he would have been overdrawn at the bank. And if you're overdrawn at the bank, that means you've obviously spent more money than what you've got coming in, and you owe that money to the bank. So if this opening balance was on the opposite side, that would indicate to us that in reality we don't have an asset of cash at bank. We are actually overdrawn at the bank, and we owe that money back to the bank. Okay? Which would mean that that opening balance on the credit side would represent a liability. Now, bank account is one of the unique accounts where the opening balance could either be a debit, like it is here, or a credit if the business is overdrawn. The other accounts, dead click normally applies to opening balances. Okay, generally they'll be on the same side as what we looked at with that dead click mnemonic. Let me illustrate that to you with this next account, the capital account. So we can see then that the capital account is fairly straightforward. We only have a $50,000 credit entry sat there, so we can clearly see that the credit side is indeed higher than the debit side. Once you've done a bit of practice on this, there really is no need to go back and, do the little list of the totals. You just identify the higher side and get the lower side to equal that. And we can do that here. Our balancing figure will be on the debit side, the lower side, for $50,000. So, on the 14th of April, 09, balance carried forward, our closing balance is $50,000. Notice both sides are equal. So when we do our totals, well, because we can clearly see that they're both 50,000, what we can do is just simply double underline it to say that that account is closed. You could do a total like we did with the cash at bank, but really all you're doing is writing 50,000 in twice again, which, it isn't necessary. We can clearly see that the balance is of 50,000. So we're closing the balance on the debit side, which means we need to open the balance for the next accounting period on the opposite side, which would be the credit side. So, 15th of April 09, balance brought forward, our opening balance at the start of the next accounting period, $50,000. And there you go. If you only have one transaction, accounts are a lot simpler to balance in that respect. Okay. So, what I want you to do now is have a go at balancing the remainder of the ledger accounts and see how you get on and see what your closing and opening balances will be. I would like you to pause the recording now whilst you are doing that, and then resume the recording once you have completed balancing all the ledger accounts all the way through to the motor vehicles account. All right, off you go. Okay, let's see how you got on then. So we did the cash at bank and the capital account with you. Now what we need to do is have a look at the answers to the rest. So for purchases then, hopefully you've got an opening balance brought forward of $12,000. Now remember, that's an expense. And an expense, if you're increasing it, is a debit entry. So can you see then that that $12,000 is indeed on the debit side? We then have a look at payables then. Your closing balance and your opening balance should be $7,000. With your opening balance brought forward on the credit side, that is, again, for $7,000. Notice then that payables is a liability. And we have an opening liability on the credit side for that $7,000. That means that George owes that supplier $7,000 starting on the 15th of April. So that balance is still outstanding. That's what we are showing here with our ledger account. Moving on then, let's have a look at sales. Sales, we should have got an opening balance brought forward of $12,000 on the credit side. And remember, sales is income, so that balance brought forward on the credit side is right, because income is the iron dead click, and that appears under the credit. Looking at rent, rent is an expense just like purchases. We have an opening expense of $450 on the debit side. Finally then, our receivables is an asset. We can see that our receivables asset is $6,000 on the debit side. And remember, that's an opening asset. So the business is still owed that money at the start of the next accounting period. Then we have a look at motor vehicles. And again, motor vehicles is an asset of $7,000 on the debit side, showing that we still have that motor vehicle of $7,000 in the business at the start of the next 2 weeks. So there we go, that's balancing ledger accounts now complete. So now we shall have a look at our third requirement in George, which will be the trial balance in our next recording.